Welcome to Talk Tickers, where we break down the most recent earnings calls. Today, we're digging into Aeva Technologies' Q3 2025 results, and believe me, there's a real puzzle to solve here.
So you've got this really interesting situation with Aeva. They post a solid revenue beat, and yet the market just wasn't having it. The stock actually took a pretty big hit. So what's going on here? That's exactly what we're going to unpack.
Here's how we're going to break it all down for you. We'll start with the headline numbers versus what Wall Street was looking for. Then we'll dive into management's story, their big bull case, and contrast that with why the market seems to be hitting the brakes. After we weigh the catalysts and the risks, I'll give you our take on what to watch for in the next call.
Okay, first things first. Let's get right into the numbers and see how they really stack up.
So if you just glance at the surface, everything looks pretty good, right? Revenue came in at $3.6 million, which is a solid 15% beat over what the analysts were expecting. And you even got a slight beat on non-GAAP EPS. On paper, it's looking good.
Now, this is where it gets really interesting. Forget the numbers for a second. Management got on the call and spun a really compelling narrative, basically telling investors this was a huge leap forward for the company. And the absolute centerpiece of their story was this announcement. The CEO comes out and says, look, we've wrapped up our development program with a top 10 global automaker, ahead of schedule no less, and now they're in the final stages of hashing out a massive production contract. I mean, you can't overstate how big this is. A deal like this, it's a potential game changer. So management's whole bull case really stands on three main pillars. First, hitting that key milestone with the passenger car OEM. Second, securing $100 million in fresh capital from Apollo. And third, making solid progress on their exclusive deal with Daimler Truck. Okay, so why is this specific OEM win such a big deal? It all comes down to their technology. Aeva's whole thing is a special type of LiDAR called FMCW. Now, you know LiDAR is basically the eyes of a self-driving car, but most systems just measure distance. Aeva's tech is different. It measures distance and instant velocity. And that is absolutely critical for real Level 3 autonomous driving. This would be the first time a major car maker says, yep, we're ditching the old tech for this.
Okay, so everything sounds great, right? Big wins, game-changing tech. So why on earth did the stock drop? Well, to figure that out, we have to switch gears and look at this through the market size. And let me tell you, the market saw a very different picture.
And this chart just says it all. You had this super bullish call, and what happens? The stock tanks over 6% the very next day. And look at the volume. It shot way up. That's not just a few retail investors getting spooked. That's a sign that some bigger players were heading for the exits.
So here's the thing. Investors weren't really looking at that 15% revenue beat. They were looking at everything else. They saw that new $100 million convertible note and thought, okay, that means future dilution for our shares. They saw the company burn through almost $34 million in cash in just one quarter. And then, and this is a big red flag for some, you had the CEO, CTO, and CFO all selling shares right after the report.
So what you have here is a classic Wall Street showdown. It's the bulls versus the bears, and both sides have a pretty compelling argument.
Okay, so let's break down the two camps. The bull case is pretty straightforward. Land this massive OEM contract, keep the Daimler Truck program on track, and just ride the wave of a LiDAR market that's set to grow like crazy. But the bears are saying, hold on a second. They're worried about execution risk. The LiDAR space is brutally competitive. And most importantly, are they going to run out of cash before they ever turn a profit?
So you've got this impressive progress on one side and some very real market fears on the other. Where do we land? What's our take on Aeva from here?
Really, the entire story boils down to one single question. Is this all just fantastic marketing and hype from management? Or is Aeva truly at a major turning point, and the market is just too nervous to see it yet?
All right, our call on this is market perform. Look, the operational progress they're making is undeniable. You can't take that away from them. But the overhangs are just as real. The dilution risk, the cash burn, the insider sales, those are significant headwinds that are probably going to keep a lid on the stock for a while.
So, what should you watch for in the next earnings call? Honestly, don't expect big revenue numbers. All eyes are going to be on one thing. Any update on that OEM decision? We think the stock's going to stay under pressure until that contract is officially signed, sealed, and delivered. Now, for an interesting trade idea, you could think about a pairs trade. You'd go long Aeva, betting that they do sign that contract, while at the same time shorting one of their competitors who's still using the older technology. The logic is simple. If Aeva's tech gets this huge vote of confidence, it could spell big trouble for the guys stuck with the old stuff.
This is not financial advice.